Hey guys, and welcome to another episode of Woke Wednesdays in Real Estate. I'm Sean LaRue with Franklin Loan Center. I'm having a great day, and I hope you are too. Look, today we're going to be talking about short-term rentals versus long-term rentals. And with the new market that we've got with VRBO and Airbnb, there's a big discrepancy with the banks and how you qualify. And how they calculate the rental income actually on an appraisal in order to qualify. So obviously when someone owns a property and is getting ready to rent it out, the owner can either go with a short-term rental, meaning less than 30 days, or long-term rentals, meaning more than 30 days. Obviously it depends on what the city requirements are, the HOA requirements are, and so you'll want to check that out for each property specifically. Obviously, what we're seeing right now is the short-term rentals are getting much higher rents on a night-by-night basis compared to longer-term rentals. That's just going to be natural. You can charge a little bit more on a short-term rental because it's not going to be so much more expensive over a 30-day period. But also short-term rentals can be super profitable, but again, it depends on what the guidelines are of the property and where you're buying it. So for short-term rentals, this type of rental allows you to rent out your property for short periods of time, just like a couple of days, up to 30 days. You'd obviously get some higher returns on that. But there's also going to be some higher maintenance costs, cleaning fees, turnover. The property's going to have more wear and tear probably. And so you'll want to definitely budget that into everything that you're doing as well. A big con of renting for short periods of time is that constantly, you don't have the security of knowing that it's going to be occupied. So your vacancy rating might be a little bit more. It just depends on the marketability of the property. And of course, you'll have to continue to pay your normal expenses, whether you're bringing in income or not. So it depends. I mean, risk versus reward, right? So for the long-term rental option, obviously you're going to have less vacancy because you're doing probably a year-long contract. You know exactly how much they're going to pay every month. You know exactly how much you're going to get. You can run your expenses and see that as well. So you might not see as high of a profit margin on the long-term rentals, but it's definitely something that is more stable over the long run because you've got your tenant in there for a year at a time. And you're collecting the rent, you know exactly how much it's going to be, when it's getting paid, and it's a really great situation. So one of the big things that a lot of people don't realize is that if you are buying it, the rental property as an investment property and you're calculating it as a short-term rental, it's difficult to know exactly how much it's going to rent for on, a daily, monthly, annual basis. So when we're looking at qualifying for that income, if the property doesn't have, in most cases, we're not looking at residential property as an income property, but you can, what you're doing is you're getting a rental survey with your appraisal, and you're using an annual contract, the annual amount of rents, not the annual amount of rent, but what the rents would be for an annual rental agreement. The appraiser's doing a net rental survey and looking at an operating expense report, and we're able to actually offset your new mortgage payment with some of the rental income on a purchase. So it's a really great opportunity. In order to qualify, you can count the rental income that you'll be getting on the property as a long-term rental or your annual rental contract amounts, the bank will not be going off of the short-term rental numbers because they don't know how it's all going to average, how many nights you're going to be booked, how many nights you're going to be vacant. So all those numbers are going to be done as a long-term rental contract situation. So that's a little bit about short-term rentals and long-term rentals and how the banks qualify. A lot of people ask me about the fact that, well, the property can do so much income if we do it on a short term. And I let them know, that's great, but how many nights are we going to get that? What's the average? And so we, go a little bit more conservative just off of the 1-year contract rental market survey. So there you go. Thanks for joining me on this one for short-term versus long-term rentals. If you like the information, give it a thumbs up. Really appreciate it. If you have something to add or a situation that you want to talk about, comment below. I look forward to hearing from you guys, helping out, answering any questions you guys might have about real estate or financing. I'm here to help and love education and helping everybody out. This has been another episode of Woke Wednesdays in Real Estate. I'm Sean LaRue with Franklin Loan Center. I'm having a great day, and I hope you are too. Stay hungry for knowledge and stay positive out there. I'll see you soon.